Human intelligence is not efficient at understanding and processing large amounts of data. Studies have shown that we are only capable of handling small chunks of data, and conflicting pieces of information tends to make us confused, and judgmental errors are very common. Financial markets participants and traders are faced with an enormous amount of information and often find themselves lost with the humongous data and mind-boggling variety of information. It is practically impossible to see, feel, and understand the relevant from the inconsequential. Technical analysis addresses this problem by focusing on the universally available data. Price and price history. Price and price history reflect and encompass all the data and the information at any given point in time. Technical analysis is founded on the belief that the markets are efficient and price reflects all information, known and unknown, and that prices move over time as participants react to newer information. As a result, technical analysis of these price trends, price changes, and price patterns can provide certain insight into the market dynamics and can be used to develop trading strategies that may offer superior rewards and efficient control of risk. Technical analysts use price history and price patterns to show what markets participants are doing. By tracking prices, technical analysts develop an understanding of the market psychology and identify patterns of behavior. Since these patterns repeat, they have a predictive value. Thus, technical analysis helps in distilling vast amounts of complex information to develop winning investment and trading strategies.